This is Savings and Investing Part 2. What is investing? It's using your money with the expectation of achieving a profit by putting it into shares, property, or using it to develop a commercial venture. Basically, making your money work for you. Why do you invest? Everybody should invest to have money in retirement. Some people might need to invest for their kids' college education, which would have a shorter time frame. Some people would want to invest in a business to make their business grow, and some people would want to invest to save for a house. One of the main investments is the stock market or stocks. So what is a stock? A stock is a piece of paper that says that you own a part of a company. Companies sell stock to raise money so that they can invest to grow their business. Companies, they do not pay you back for the stock. You just always continue to own it. And as the company grows, hopefully the stock grows in value and you can always sell your stock to somebody else. Where do you buy stocks? You do not buy stocks directly from companies. You buy a stock off the stock exchange, and there are two stock exchanges in the U.S., the New York Stock Exchange and the NASDAQ. This just shows a bunch of companies that are available on the stock market exchanges in the U.S. So you can see Apple, Google, Facebook. The New York Stock Exchange has about 2,300 companies that are listed, and their total market capitalization, or their total value, was $28 trillion as of June 2020. And the NASDAQ has about 3,500 companies listed, and their total value was about $10 trillion. So you can see that the average New York Stock Exchange company is larger than the average NASDAQ company. So there are between 5,000 and 6,000 publicly traded companies at any time in the U.S. And there are new companies being listed all the time, and there are companies that are either bought or go bankrupt all the time. This shows you the returns. If you bought Apple for 1 year, you could see that you have a $50 return, and so you'd have a 41% return in 1 year. This shows if you bought Ford stock for 1 year, you would have actually had a 4% loss. So obviously you don't want to do that. So seeing one company you could make money, in one company you'd lose money. How do you tell the difference, or how do you decide which company to buy? There is an option called an index fund where it buys all 5,000 to 6,000 companies that I mentioned. Over many years, the stock market has always gone up. So here you can see this is from about 1977 to 2017, and you can see that stock markets went up. And you can see in 2002, looks like there was a big dip, and then again in 2008, and there was. If you look back to about 1987, there was also a big dip, but it looks very small now when you're looking back. Many other countries have their own stock exchanges. So you can see Germany, Japan, Australia, China all have their own stock exchanges. And these are called international markets, and they work very similar to US markets.